A race is unfolding across corporate America. But unlike the space race or the race to build the first smartphone, this one isn't being fought in public. There are no finish lines, no trophies, and no single winner. Instead, it's happening inside boardrooms, research labs, data centers, manufacturing plants, and corporate headquarters across the United States. Every day, executives are making billion-dollar decisions that could determine whether their companies lead the next decade or spend it trying to catch up. At first glance, it may seem like every business is pursuing a different strategy. Some are investing in artificial intelligence. Others are expanding cloud infrastructure. Some are building factories. Others are strengthening supply chains or modernizing their operations. But beneath all those decisions is one race that connects them all. The race to build the most productive, adaptable, and resilient business. And it could redefine American business for years to come. Here's why. For decades, success was often measured by size. The largest companies usually had the biggest advantage. More employees, more stores, more factories, more customers. Growth meant expanding your footprint. And for a long time, that strategy worked. But today's business environment has changed. Simply becoming bigger is no longer enough. Companies now have to become smarter, faster, more efficient, more flexible, because competition moves at a speed that few businesses experienced even 10 years ago. Customer expectations change almost overnight. Technology evolves continuously. New competitors emerge from unexpected places. Markets shift faster than traditional planning cycles. That has forced companies to rethink what competitive advantage really means. Take productivity. In the past, businesses often increased output by hiring more people. Today, they're asking a different question. How can every employee accomplish more? That's leading companies to invest heavily in automation, cloud computing, advanced software, artificial intelligence, and digital workflows. These investments aren't simply about reducing costs. They're about helping businesses make better decisions faster. When routine work becomes automated, employees can spend more time solving problems, developing products, and serving customers. That creates a productivity advantage that compounds over time. And once one company gains that advantage, competitors feel pressure to respond. That's how the corporate race accelerates. Technology is only part of the story. Infrastructure has become another major battleground. Across America, businesses are investing billions in new facilities, data centers, semiconductor manufacturing, logistics hubs, and energy projects. These aren't projects designed to improve next quarter's earnings. They're long-term investments built around one expectation. Demand for computing power, digital services, and efficient operations will continue growing for years to come. Executives aren't simply reacting to today's economy. They're preparing for tomorrow's. That forward-looking mindset is becoming one of the defining characteristics of modern business leadership. Another important part of this race involves talent. Despite advances in automation, businesses still depend on skilled people. Software engineers, cybersecurity specialists, data scientists, project managers, operations experts, researchers. Companies are competing aggressively to attract and retain employees capable of driving innovation. The goal isn't hiring the largest workforce, it's building the most capable one. That distinction matters. A highly skilled team using the right technology can often outperform a much larger organization operating with outdated systems. That's changing how companies think about hiring, training, and professional development. Learning has become a competitive advantage. Organizations that help employees develop new skills adapt more quickly to changing business conditions. Those that don't often struggle to keep pace. Then there's capital. Building the future isn't cheap. Expanding cloud infrastructure, constructing data centers, modernizing manufacturing, strengthening cybersecurity, developing advanced software, training employees, improving supply chains. Each initiative requires enormous investment. Yet companies continue spending because they believe the cost of waiting could be even higher. History offers several examples. Businesses that embraced the internet early gained significant advantages. Companies that invested in e-commerce before it became mainstream often emerged as market leaders. Cloud computing rewarded businesses willing to modernize ahead of competitors. Today's transformation appears to be following a similar pattern. No executive wants to explain why competitors became dramatically more efficient while their company remained unchanged. That's why investment continues even during periods of economic uncertainty. Customer expectations are also fueling this race. Consumers increasingly expect faster service, better digital experiences, reliable products, personalized recommendations, instant access to information. Meeting those expectations requires continuous improvement. Businesses can't simply innovate once and assume they'll remain competitive. Every improvement raises the standard for everyone else. That constant evolution keeps the race moving forward. Of course, there are risks. Not every investment succeeds. Some technologies fail to meet expectations. Some projects exceed their budgets. Some companies will spend billions pursuing strategies that never fully deliver. That's inevitable during periods of rapid change. But doing nothing carries its own risks. Standing still while competitors improve isn't really standing still. It's gradually falling behind. That's why so many businesses appear to be making similar decisions. They're investing in productivity, infrastructure, digital capabilities, cybersecurity, employee development, and operational resilience. Each investment may look different on the surface, but together they reflect the same strategic objective: build a company capable of adapting faster than the competition. Wall Street has noticed this shift. Investors increasingly pay attention not only to quarterly earnings, but also to long-term capital spending, technology strategy, workforce development, and infrastructure investments. Why? Because those decisions often reveal where executives believe future growth will come from. The companies investing wisely today may become tomorrow's industry leaders, not simply because they spent more money, but because they built organizations capable of evolving continuously. And perhaps that's the biggest difference between this corporate race and those that came before. Winning isn't about reaching a finish line. There isn't one. The businesses that succeed won't stop adapting after one breakthrough. They'll continue improving year after year while competitors try to catch up. That's a very different model of competition. It's not based solely on scale. It's based on learning faster, investing smarter, and responding more effectively to change. And that's why the corporate race happening across America today could redefine business itself. Because the companies shaping the next decade won't necessarily be the biggest names. They'll be the ones that understand a simple truth. In modern business, the greatest competitive advantage isn't standing still long enough to defend what you have. It's building an organization that's always ready for what's coming next.